Scott Martin joins us now on the phone. Scott, your take, please,
Yes,
on what looks like a really nasty sell-off right now.
It's not good, that's for sure. Not even good if red's your favorite color, Stuart. I'll tell you, this is one of those markets, and I agree with a lot of what you were saying with my friend Keith there prior to me coming on, which is this is one of those markets where selling is begetting more selling. And similar, actually, ironically, to yesterday, where buying actually provided more buying. You know, we did have a nice run-up yesterday because the buyers came in, and I think that was something that built the momentum. But look, there is a lot of uncertainty out there. I will argue, though, that a lot of things that you and Keith talked about are knowns. I mean, these are things that have been out there for quite some time. You know, this interest rate picture. The Fed's been hiking interest rates now for several quarters. There's been a slowdown going on in China for several quarters. There's been problems overseas in Turkey or the Middle East for several quarters. So now the market is finally coming to grips with this. And this is the tough part, but the fun part of being an investor is that sometimes the market just doesn't give a frick about some of those things I just mentioned, and other times it does.
Well, it's
and
October,
right now,
isn't it? Yeah, I mean, October
right.
is one of those special months. I mean, I remember October 19th, 1987.
2008
2008,
well.
right?
2008,
1929 is also an October sell-off.
I don't remember that one, Susan, but nonetheless, I'm joking around here. But I talked to Keith, Scott. I talked to him about capitulation selling, where everybody throws in the towel, you sell everything you've got. It doesn't look like we're quite there yet, does it?
No, it doesn't, but it's coming, Stuart, and it's closer than I believe we think, and that is exactly the point at which I think you really have to. It's hard to say, but you got to pick up everything off the floor and put the money back in the market. And that period of time is coming. And the problem with that is going to be that, yes, people are going to say, well, we're going to put this money back in the market and we're going to have to, make so much back up to make up for what we've lost in such a short period of time. But that's what markets do. They
Sure.
take the stairs up or the escalator up and then jump out the window, and this time should be no different.
Do you have a strong enough stomach to buy Amazon today? I noticed that it is down about $160 per share. It's just above $1,600 a share. It's about $450 away from its all-time high. Do you have a stomach strong enough to buy Amazon today?
You better believe it, because Amazon is a company, Stuart, that I believe in. It's a company whose revenue growth I'm very excited about, and it's a company who I want to own for several years. And so I believe that in the next couple of years, Amazon is going to be higher from where it is today. And I'll tell you what else I'm going to do, though, to make myself feel better about this. And this is something we talked about on your show live on Monday. Alongside buying some Amazon today and one of your favorites, I know, Microsoft. I love you, Microsoft. I'm going to buy some gold. I'm going to buy some GLD, which is an ETF, Stuart, that tracks the price of gold because gold is behaving well. I'm also going to buy some U.S. dollar. UUP is an ETF that we've owned, both of which we've owned, GLD and UUP, as ways to mitigate some of this volatility. Just as, again, this is probably not the bottom. It's getting close. But as I buy some of these crazy tech stocks that are getting hammered, I'm going to buy some of those dollar plays and as well as those gold plays to kind of level off some of the volatility that the tech companies have.
Yeah, and Scott,
hold on a second, Scott, go.
Yeah, just to note that with the sell-off in Amazon, you'll like this. Microsoft has actually surpassed Amazon in market cap today.
So the value of the company as represented on the stock market,
right.
Microsoft is now more valuable than Amazon.
Bigger than Amazon. And Amazon is the second company to cross $1 trillion in market cap. So
it's
think
not,
of that.
not $1 trillion now, is
Not
it?
$1 trillion.
800 billion or something like that.
No.
Look, I can't imagine how much money has been wiped off Jeff Bezos' net worth.
Well, he's still worth over $100 billion. Still the richest in history, so I don't feel too sorry for him. He'll be fine.
What do you make of that there, Scott? Microsoft is now more valuable than Amazon. Wasn't expecting that.
No, I was not. And I'll tell you what's funny about that is if you look at Microsoft's earnings, they obviously probably deserve that given how the earnings report went versus Amazon's. But, like Susan said, they're going to trade trillion-dollar valuations or trade, hey, I've got a higher valuation than you do, valuation type of talk because they're so valuable. I mean, the reality is, as Susan pointed out, these companies are massively valuable. So, hey, if they lose, $500 billion in value, or say $50 billion in value, rather, it's probably just a given day's work, given how the volatility's trickling into the market right now.
1 second, please.
Yeah.
Susan, you've got information
So
on what?
so the S&P 500 right now is flirting in correction territory. That would be down 10% from recent peaks. We're coming within a fraction of that. So we have to be down. We have to finish the day down 10% from its record closing high of 2930.75. That was on September 20th. And S&P 500 falling, 67 points so far today? We have to fall 67 points to enter correction territory. Very, very close, practically there.
Okay, Scott, what's the significance of the statement that the S&P 500 index has now entered or is about to enter bear correction territory? What's the significance? What does that mean?
As an investor, it probably shouldn't mean too much, but I will tell you, Stuart, that given the behavior we've seen in the markets, what this could do is it could start triggering more sell programs. One thing we started seeing on our end is a lot of these sell programs kick in when we get to certain levels, like Susan just mentioned, with the correction status. So therefore, you could have some of these sell programs, basically think about it, of these computers effectively playing ping pong with each other, a sport I love myself, where, you know, they're just going to come in and start kicking in some sell orders because of the fact that we're at certain levels now that they've been watching for to put more pressure on this market.
And there's nothing you can do about that. The algorithms are in place. The equations are in place. They can't be changed at the last minute so that the computers will continue to ping-pong against each other. That's a given, isn't it, right now? A given.
They will. And the good news is of that, if I could put a silver lining on it, is it does do that on the upside, too. It's just right now, this is one of those flow situations where a lot of the stuff is to the downside, but we did see some of that yesterday. In fact, right around 2 o'clock Central Time yesterday, there were some big buy programs that came in when we crossed a couple big levels in the Dow and the S&P. That could come into play, too, you know, at some point in the future, but right now, those sell programs are focused on at least the sell side and pushing this market down.
Well, it sure works both ways, and as we've been speaking, Scott, we've seen the market just take another leg down, 480 down now for the Dow.
Close to session lows.
That's session lows, you're right, and for the NASDAQ, we're down, I think, about 230, is it? Something like that. I mean, that's an extraordinary loss right there. Scott, thanks for joining us at such short notice, but it's a very big day.